Wall Street has a trillion-dollar problem. For decades, humans ruled the markets with gut instincts and spreadsheets. But a new challenger is here. Is a machine better at forecasting the future than a seasoned pro? We're pitting elite finance minds against the world's most advanced AI models like GPT-03 and Gemini Pro. It's a 3-round heavyweight battle. Round 1, qualitative rigor. Can AI write a better analysis than a human? Round 2, the numbers game. We're testing pure accuracy. And round 3, verifiability. Can we trust these robots? Is the human analyst an endangered species, or is the human touch still the gold standard? Let's find out who really wins, AI versus Wall Street.
All right, let's get right into it. Today, we're stepping into the ring for a real high-stakes title fight. In one corner, you've got the seasoned expertise of Wall Street's sharpest financial analysts, and in the other corner, the challenger, some of the most advanced artificial intelligence on the planet. This is the ultimate showdown to see who can write the better investment report.
You know, this is the question on literally everyone's mind. With AI taking over so many jobs, you have to wonder, is the super complex world of financial analysis next on the chopping block? Well, researchers at JPMorgan's AI research division decided to find out for real. And we are going to break down exactly what they found, step by step, to see who really comes out on top.
So, on the screen here, you can see the work of our two contenders. On the left, that's a report put together by human experts. You can just see the density, the nuance. It's the gold standard in the industry. And on the right, that's a report generated by a top-tier AI. Looks pretty sleek, seems comprehensive. At a first glance, you might think they're pretty evenly matched. But as we're about to find out, looks can be very, very deceiving.
Okay, so to figure this out, we need a proper competition, right? So let's set the stage and really meet the contenders in this massive financial title fight.
Here is our fight card for today. First, we're going to go over the rules of the match. Then, we've got 3 big rounds: quality, accuracy, and verifiability. And of course, at the end, we'll get to the judge's final verdict.
And here they are, our AI challengers. Now, these aren't just your standard chatbots. These are specialized deep research agents, or DR agents for short. We've got OpenAI's agent, which can actually execute Python code. We have Gemini, which is a pro at multimodal reasoning, meaning it gets text, images, you name it. Then there's Grok, which has a direct line to real-time Twitter data. And finally, Perplexity, a master at pulling together info from tons of different documents. I mean, what a formidable lineup.
Any fair fight needs a clear rulebook. The JPMorgan researchers actually created a framework called the Deep Fin Research Bench just for this, so they could judge these reports systematically with zero bias. So let's see how they scored this thing.
So, every single report was judged on 3 key dimensions. First up, qualitative rigor. Basically, is the analysis actually insightful? Is the argument solid? Second, quantitative accuracy. Are the numbers, the forecasts, are they actually correct? And third, and this one is huge, verifiability. Can we actually trust the facts and figures being presented?
Ding, ding, ding! Round 1 is all about quality. Here, we're looking past just the numbers. We're looking for insight, for coherence, for the depth of the arguments. This is where the real art of financial analysis comes into play.
And wow, this chart right here pretty much tells the entire story of round 1. See that big red diamond on the outside? That's the human analysts from what they call Firm A. And those smaller shapes huddled in the middle, those are our 4 AI agents. As you can see, it's not even close. There is a massive performance gap. The humans are absolutely dominating this round.
So where exactly did the humans pull so far ahead? Well, it all came down to analytical depth and coherence. The human analysts were consistently scoring in the good to excellent range because they weren't just listing off facts. They were weaving them together into a compelling, logical story. And that's something the AIs really struggled with.
Okay, on to round 2. We are leaving the kind of subjective world of quality, and we're getting into the cold, hard world of quantitative accuracy. In this round, it's all about one thing: getting the numbers right.
The challenge here is pretty simple. Who's better at predicting the future? Forecasting a company's revenue, its income, its earnings. I mean, this is the absolute bread and butter of a financial analyst's job. Can the AIs even keep up?
First up, the human pros from Firm A. When they were forecasting operating income, their average error rate was just over 5%. Let me tell you, in a volatile market, that is incredibly accurate. a really, really strong performance.
And now for the AI. Looking at that exact same metric, one of the top AI agents had an error rate of nearly 30%. I mean, that is a gigantic difference. When it comes to the core financials, the human analysts deliver a decisive, clean knockout in this round.
But wait, there's a fascinating twist. While the humans are way better at forecasting a company's fundamental financials, the study found that the AIs can actually be surprisingly good at predicting the direction of stock prices over certain timeframes. So this shows that the AIs are learning, and in some really specific narrow areas, they're already becoming competitive.
And now we come to our final and maybe the most important round of all, verifiability. It all boils down to one simple question. Can you trust the information in the report? Because if the facts are wrong, the whole analysis just completely falls apart. This is the ultimate trust test.
Now, to really get this round, we need to talk about hallucination. This is when an AI basically, well, it makes stuff up. It will state a fact or a number that is either totally wrong or it's not backed up by any of the sources it claims to be using. It's a massive, massive problem for AI trustworthiness.
So, how did our AI contenders do? Well, the best performer, OpenAI, had a factuality rate of 86%. That means 86% of its claims could be verified. Now that sounds pretty good, right? But think about it. It also means about 1 in every 7 claims could be a total hallucination.
And then you have Grok. Its factuality rate was only 53%. That is basically a coin toss on whether any given statement is true. This incredible difference just highlights how unbelievably risky it can be to rely on these tools without double-checking literally everything. This is a huge weak spot for Team AI.
The final bell has rung. We've been through all 3 rounds: quality, accuracy, and verifiability. Now it is time to go to the judges' scorecards for the final verdict.
And the decision is, well, it's unanimous. I'm just going to read this directly from the JPMorgan research paper. AI reports are well-structured and numerically explicit, but consistently underperform professional analysts. The champion holds on to the title.
So why do the humans win so decisively? Well, the AIs really struggled with the details, the sector-specific stuff. Their assumptions were pretty weakly justified, and they totally failed to do crucial scenario analysis, modeling best-case and worst-case scenarios, and of course, the big one, those significant factual hallucinations. For right now, the nuanced, critical thinking of a human expert is still absolutely irreplaceable.
The AI may have lost this fight, but make no mistake, it's already back in the gym training for the rematch. It is getting smarter, more accurate, and more reliable every single day. So the real question isn't who won today. The real question is, for how much longer will that victory stand? Thanks for joining me for this explainer.